strengthening financial sector stability in fragile and low-income countries. But first things first, what is financial stability? The easiest way to understand financial stability is to think about what happens in its absence. We all know, past or present, during episodes of financial instability, depositors lose confidence and start bank runs, banks fail, and broader financial crises lead to costly government interventions. Credit to the economy dries up, jobs are lost, leading to increased poverty and inequality. Regardless of the sources and transmission channels, financial instability tends to affect us all in a negative way. Therefore, investing in financial stability and investing in institutions aimed at strengthening financial stability is important. So where does the IMF work fit in? Financial stability is in our DNA. The IMF has been tasked with maintaining macroeconomic and financial stability at a global level. Our role is even more important in low-income and fragile countries which are confronted with many protracted challenges undermining their growth and stability. In these countries, building capacity and building the institutional infrastructure for financial stability requires a more holistic approach with more attention to human capital. Today's focus is going to be on the Financial Sector Stability Review. Financial Sector Stability Review is a capacity development program which has been introduced in 2017 with a focus on financial sector stability and building institutions in fragile and low-income countries. Since then, as you can see on the map, we have engaged with 23 countries and counting. It has also become a flagship product of the Monetary and Capital Markets Department. Let's now have a look at the key features of the Financial Sector Stability Review Program. The Financial Sector Stability Review Program has two main components: a diagnostic review, which identifies gaps in the financial stability oversight framework, followed by a medium-term technical assistance program, which is aimed at addressing those gaps. The overarching objective is to improve the capacity of the authorities to identify, monitor, analyze, and mitigate risks to financial stability. Indeed, in the initial phase, when we are looking at the diagnostic review, the IMF team would work with the country authorities to identify gaps in the key pillars of the financial stability framework. We look at the financial regulation and supervision framework. We look at the lender of last resort, deposit insurance scheme, the safety nets, more generally speaking, and we are also looking at the framework for monitoring systemic risks. The gaps identifying during this diagnostic review then feed into a medium-term technical assistance roadmap. Now, this technical assistance roadmap is designed together with the authorities. The authorities are in the driving seat. We help them prioritize and we help them sequence the technical assistance activities in a way that best fits the needs on the ground, and very mindful of the capacity of the authorities to implement a broader financial sector agenda. We are deploying experts to help engage with the authorities. In many cases, we place experts on the ground as banking advisors, of advisors in financial stability, and they are there to support the authorities on a day-to-day basis and to help train the staff and provide advice in a timely manner. The program is also coordinated with other providers of capacity development, such as the World Bank. And I'd like to recognize the contribution of the IMF Statistics Department, who is also supporting us and the authorities to improve the data collection and compilation of data for financial stability. Now, let's hear from some countries' experience, and I have the privilege of introducing to you two distinguished guests. Governor Saidi from the Central Bank of the Gambia and Acting Governor Stevens from the Bank of Sierra Leone. Governors, thank you very much for being with us today. Let me start with Governor Saidi. Governor, it would be very insightful if you could please talk about the main achievements and challenges that you and your team have faced during the Financial Sector Stability Review Program in the Gambia. You have the floor, Governor.
Thank you very much, and good afternoon to the listeners here. I will first start with the challenges and then go to the main achievements. 3 years ago, we entered into an ECF program with the IMF, and part of the conditions, one of which is to at least have 2 banks to undergo stress testing. But we had big challenges with that because of inadequate human resources and also financial resources. We had about 17 staff in the department, and we have like 12 banks. So to do this stress testing was a challenge in terms of human and financial resources. In addition, the model, to build the models to do the stress testing was also a challenge. Data also was a challenge. So for some time, we could not fulfill that requirement under the program. But with the help of the fund, we had the technical assistance from the IMF to come and do the FSSR. So when they came in with the resources, they helped us to build the model and also to do the stress testing. The main achievements is that it enhanced the quality of both off-site and on-site examination. The stress testing was there. We were able to do it, but the modeling technique also was available. And then the data also was gathered, and they were able to clean the data so that the results from the model to indicate the outcome of the stress testing would be also enhanced. And also, the staff at the department also had confidence in not only being able to do the modeling and the stress testing, but in terms of even writing skills. Because we had, the advantage also is that we had also a resident technical assistant. And the lady was fantastic. Kat, she easily blended into our society and our culture. So she is regarded as the grandmother of the department, the BSD. And she was able to, having known the challenges, she quickly devised a technique to bring the staff up to speed and boost their morale and confidence. She was having weekly meetings with them and was giving them writing assignments. So it was not only enough to do the modeling stress testing, but the writing and analytical skill also improved. So in terms of achievements, staff morale was boosted, modeling techniques and stress testing was there, capacity was strengthened, and enhanced skills and critical thinking also in terms of even off-site and on-site examination. So at the end of the day, capacity was enhanced, and the technical assistance that was coming from Washington, Moses and Ivan, they also did fantastic job. Within a short period, they were able to bring the staff up to speed in terms of data collection, data analysis, running the model, and the results. And the main achievement for us as governor of the central bank, my team, and also the monetary policy committee, the results of the stress testing, because at the monetary policy committee meeting, which we have every 3 months, we look at all the macroeconomic data. And then the banking sector, which is a critical pillar in the economy, we were not getting that evidence in terms of econometric modeling getting results. So basically the reports were just narrative, but with the technical assistance and after the SSR, we were able to also know the areas of vulnerability, and the stress testing results presented to the monetary policy committee enhanced our decision making because policy was well informed.
Thank you very much, Governor. Would you have any advice for countries seeking a financial sector stability review?
Yes, my advice would be for low-income countries that don't have adequate capacity to take advantage of the resources available at the IMF, because that's our main benefit of joining the fund. We get support in terms of programs and financial resources, but the policy advice also because of the capacity at the fund, and even if it is not available at the fund, they can source it outside. So my advice would be for countries, member countries, to take advantage of the SSR and the technical assistance they provide, because it will help you to understand your financial sector and also the vulnerabilities and the risks in the sector. Having identified that, the team that comes from Washington would help now to work with you to have solutions in terms of stress testing, improve analytical skills, and the backbone of the SSR is the resident advisor. That is critical, and I would use this opportunity to also appeal to the fund and the donors that are behind this project or program to continue providing those financial resources to countries that would need these technical skills to improve the monitoring of their financial sector. Because after the diagnostic, the design of the SSR program and the way it is structured, then you can now go after the problem areas one by one and solve them. And then it will help in terms of the quality of the advice you get from your supervision department to ensure that you have a very sound, solid, and liquid and a vibrant financial sector to support the real sector.
Thank you so much, Governor. Let me now turn to Acting Governor Stevens. Welcome again, and we would like to please ask you to refer to what makes the Financial Sector Stability Review Program different from other technical assistance that has been received by your central bank? Thank you.
Well, thank you very much. I'm delighted to be here and also to share experiences from Sierra Leone. The Financial Sector Stability Review is particularly useful because of its detailed nature. It is quite well structured, and for us in our case, what made it particularly useful was our involvement in designing a TA roadmap following the diagnostic analysis. The diagnostic analysis also is critical because it allows us jointly to prioritize what capacity needs there are in the central bank. And in our case, it was a very detailed and deliberate exercise, and we were able to first calibrate our problems, understand the capacity gaps and needs, but also from a very broad standpoint, look at the financial system itself and see what is required to move the system forward. In a way, it was trying to achieve financial sector development through a detailed diagnostics and assessment and analysis. The FSSR is very good. However, the FSSR works best when countries are involved in the development and the designing of the TA roadmap. Now, when it comes to actually delivering the technical assistance, I know you have various instruments in the IMF ranging from short-term experts to the regional tax, or in our case, it's AfriTac West 2, or the African Training Institute. But in my view, like the Gambia, the most useful aspect is having a long-term advisor resident in the central bank. It helps harness and leverage all the other resources that comes in, but also helps with long-term planning and continuation of capacity development. That is critical in our view. If you allow me, the diagnostic that was done in Sierra Leone, two aspects came out that has actually proved particularly helpful in developing our financial stability work processes. Risk-based supervision, for example. You know, like most central banks in the region, we were largely compliance-based. You've got supervisors that have spent 20 years in practice. They're compliance people. And you've got to change the entire ethos to risk-based, targeted risk assessment, risk analysis. That is not an easy task. But with a combination of instruments, with the resident supervisors, with the short-term experts coming in, with other regional training activities that are involved as part of the structured approach in the FSSR, we've been able to do something and make a considerable progress in that area. We've communicated with our banks. Our banks were involved in the development of the risk-based supervision framework. With the help of the resident advisor, we've published the framework. We've got key stakeholder participation, but more importantly, we've been able to achieve management buy-in within the central bank, from the board to senior management, and we've been able to redeploy resources to ensure that we have the necessary staff numbers to be able to take this particular objective forward. So in my view, this is extremely useful, but it has to be very well targeted, and also the host central bank must be willing to make the necessary investment in order to ensure that the project, the program itself succeed, both from deploying your own resources, bringing in adequate number of staff, giving the necessary training, but also working with the old supervisors that are rooted in compliance to have them change the ethos, the modus operandi, to move into a much more risk-based assessment approach that helps. It takes time, it takes a lot of effort, but with the right plan in place and good sort of management of the transition, you're bound to succeed. And we've been able to do that in Sierra Leone. Over the past couple of years, we've completely turned around our approach to bank examination. And now all our bank examination are conducted from a purely risk-based standpoint.
Thank you very much, Governor Stevens. Perhaps another question, whether you could talk about what steps can the Bank of Sierra Leone take to ensure that improvements in capacity remain permanent?
Yes, as I said, it is important for the authorities to own a capacity, development program, both in terms of deploying the adequate number of staff, deploying trained staff, recruiting the right caliber of staff. In supervision, you need good accountants, you even need good people with good legal background, also with good IT skills. So you have to take a pragmatic approach in trying to get the right staff recruited. Second, you need to train and retain those staff. Retrain staff as well. There are staff, as I said, may have come from an old compliance background. Work with them. The transition is not easy, but work with them, get them to internalize the ethos of risk-based supervision. And all of this must be captured in the TA roadmap. I think when you do that, you own the process and it is sustainable. So it is a matter of the right investment, the right collaboration, and working with the IMF and other partners, in our case, to try to achieve a long-term objective of transforming your supervisory landscape, but also, preparing the next generation of examiners in this new framework. Dare I say there is a good link between monetary policy and financial stability. For example, something that came out of the FSSR in Sierra Leone is how to harness excess liquidity in the banking system. There is a huge amount of foreign currency deposit in the system. It's allowed us to take a step back and have a look at our regulatory framework in that regard. And I must say, it has engendered some changes, and we now, for example, permit commercial banks to lend in foreign currency on a case-by-case basis, obviously taking into consideration the risks that are involved. So I suppose my point is, although it's a purely financial stability exercise, but it has potential efficiencies and spillovers to monetary policy as well.
Thank you very much, Governor Saidi and Governor Stevens. Your observations are noted, and you have provided us with very useful insights and recommendations. Perhaps, I would like to recognize how important is the tone from the top in really promoting these reforms. It really takes a village to get things going, but when you have the top management driving these reforms, I think it makes a difference. And you can see in both cases how involved the governors were, and they have very committed heads of the financial supervisory departments. And as far as I know, a lot of effort has been put into raising awareness with the board of the central banks and with other executives. And this is very important. Why? Because it secures the ownership, full ownership, and it ensures that this culture of change becomes entrenched in their central banks, and also it makes this capacity building lasting. The other observation I would like to make is that, we are, of course, in very close contact with our experts on the ground. And, they have told us how It does take time to understand the culture of the place and also to gain the trust of the authorities. But once that happens, they are become part of the team, part of the local team. And I'm quite impressed, Governor Saidi, how you know by name all the people who have provided technical assistance to the team at the Central Bank of the Gambia. And we are trying to act as trusted advisors, and we are there to provide guidance, to help staff formulate the right questions, to help lay out options for them, to share best practices from international experience, to help them understand the international standards in that particular field. But the authorities and the team on the ground are really in the driver's seat, and that makes a huge difference. So thank you very much once again, governors. And I would like to also thank our generous partners in this effort, because the program wouldn't be possible without the support of our partners. Thanks to their generous support, we are able to implement long-term capacity development programs in the most vulnerable member countries in the critical area of financial stability. With that, I would like to thank you all for participating in this city talk, and to let you know that we are here to answer any questions you may have. And if you need additional information, there is a website where you can consult the different countries' experiences and learn more about the process and how to engage with us in these financial sector stability review programs. I must say the Monetary and Capital Markets Department is looking forward to continuing engaging with member countries in strengthening their frameworks for financial stability. Thank you very much.
Okay.
We are happy to take questions. Please. Please identify yourself and no.
Hello. Hi. Mary Mansouri with Stanford Economics, and I'm a strategic sustainability advisor for Urban Logic, a nonprofit based out of New York. And I'm curious as to, you mentioned a lot about the stress testing that you underwent. And I understand that the TA assistance and infrastructure was a big issue that you might have predicted going forward, but I'm curious what surprised you, and maybe you could elaborate on some of the outcomes of those stress tests. Yeah.
Thank you very much. It's a very good question. The stress testing, like I said, was particularly important for us, especially at the Monetary Policy Committee level, because the results revealed that the banks that we have, the stress testing was done at various degrees. And the results that showed up, at what point do we have some banks that are not strong enough and may collapse and affect the financial sector and also the real sector. So the results would help us in the decision making, and most importantly, over time, since when this stress testing started, it has revealed to us that the capital adequacy ratio of most banks we thought is solid, but with the results, the indications there, we are of the view that we need to increase the capital of commercial banks. And that results also tallies with the frequent requests we get to my office to approve some of the banks, because the law says that they can lend up to 25% of their capital. Above that, they have to come to the central bank for the governor to give them that single obligor to give them a waiver to go above that ceiling. So the results of the stress testing at that frequent request now shows us that we need to deep dive into the financial sector to see if the capital that the banks have are adequate. And that study has been done. It's under review before it's submitted finally to senior management. But the indication is that we need to ask the banks to increase their capital, because the last capital review was in 2012. So it's been a long time, which is consistent with the results of the stress testing. So that's one of the main usefulness of this stress testing.
Thank you. Thank you very much. I must say that we run out of time. We would be happy to take any questions on a bilateral basis. And I would like to thank you once again for participating in our event and learning about the financial sector stability review of the Monetary and Capital Markets Department, IMF. Thank you.
Yeah.